GM, everybody. We are excited to go live finally on a green day instead of a red day. And we have one of the best people we could possibly do that with, Jim Bianco. We're going to talk macro, we're going to talk administration, crypto, a lot to get into. Let's hit the intro. Welcome, lads. A special live episode. We have Justin with us. We have Jim Bianco, special guest with us. No Taiki today. He is getting married. So congrats to Taiki out there. And it's also a very green day in the markets overall. And clearly, I just took a look. NASDAQ is up just a little 400 points. And the S&P, just a hundo ball. So, the fact that crypto is bouncing is clearly being driven by macro factors. These are very tight markets right now. Maybe, Justin, you can just bring up the Bitcoin and prices here. So we're close to 85K. Thickies and shambles. But ETH still down 13% for the week, Justin. So 1920.
Both Justin and Thicky are still in shambles, so it's a tough one for the markets to achieve.
Indeed. Solana 10% down, but a lot of the other coins doing okay. I know it's all relative, right? Like with today's bounce, at least like this week feels a little bit better. But clearly, what's been happening is we've had a 10% drawdown in S&P, which is Jim, you called it the easy days of just buying these things and holding is over. Please kind of elaborate on that.
Well, you've had the 20% gains in the stock market for the last couple of years, the S&P, last 2 years in a row. And the perception is that there's really only four investments in the world, right? There's stocks, there's bonds, there's crypto, and there's maybe some other alternative. And one of them always goes up 20% a year, maybe gold. I think that era is over. I think that when it comes to the stock market, you're probably going to see mid to low single digit returns on the indexes. But it's going to be more like the 90s market. There's going to be themes that are going to be working in there that you can probably make a lot of money on. There's going to be themes you can lose a lot of money on as well. If I use the analogy, these markets have been like, if you go out sailing in a 20-knot wind, you don't need any skill. Just get the sail up and it'll push your boat forward. But if you go out sailing in a 5-knot wind, you're going to have to learn how to tack and trim, and you're going to have to learn how to become a real sailor and pick your spots where you can get the boat to move forward. And I think that's the kind of market that we're going to wind up having from here. So we might rotate back over the next couple of years. Instead of talking about, well, is the S&P up or down, or is the Russell 2000 up or down? We'll be talking about, what are financials doing? How about the big banks? Have you taken a look at healthcare? How about consumer discretionary? Check out what's happening with international industrials. Those types of conversations, I think, are going to come back in the market in the next couple of years.
Yeah, I mean, I think we're looking forward to that. Really getting out of this, very passive way of allocating capital, and it's so inefficient when you do that. It just kind of ends up in all kinds of bubbles and pockets that don't make any sense. And just for our viewers, I think our viewers are familiar that before crypto, I was trading macro for many years, and I have to say Jim was one of the people I had on my short list always. And your accuracy percentage is definitely one of the highest. You're one of the most high signal people that anyone can listen to on this stuff. And just as macro people, occasionally become experts in Wuhan flus, and then the next week they're experts in like battle lines on the Ukraine front, or every week it's like Bolivian monkey flu. They always are experts at something that they have to adapt to. Same in crypto. Usually we're talking about gas on L2s and stuff like this, but occasionally macro comes in the picture. It's the CPI numbers, it's the liquidity numbers, and I think everyone's been feeling that this is one of those moments where we need to get the Jim Biancos back to tell us, a little bit what's going on out there. And one of the key things is the 10-year bond. And I've heard you talk about this, that, you actually believe that the administration is targeting the 10-year bond right now as a sign. And maybe you can bring this tweet up, Justin, but Jim kind of showed that it's not doing much despite the market downturn. Like this is not what you expect to see when you have a proper correction. Like what's happening here?
Yeah, first of all, it's the administration said that they're focused on the 10-year bond and they're not focused on the S&P. And I believe them. I think that that's where their focus should be. Their policies are geared towards, trying to bring down the 10-year bond. Whether or not they can or can't is going to be another issue. But what this chart is showing you is that we're at the same level of yield that we were on February 29th. February 25th. February 25th, the S&P correction was 2%. And yesterday it hit 10%. So during 80% of the decline of the stock market, if you ran into the safety of TLT or bonds, you didn't lose any money, but you didn't make any money. And that is, instructive to point out and ask the question, why? And I think the answer is that there is a real latent inflation fear in this market right now. We might call it stagflation. Stagflation is just inflation with slow growth. Inflation fear is inflation without slow growth. But there is an inflation fear in this market. You're seeing it through some of the surveys that people are very worried about inflation. Maybe that's tariff driven. You're seeing it in some of the data, even the CPI report that we got this week. There was a bunch of one-offs that like airline prices and used cars and stuff that depressed it. That shouldn't last. But if you look at some of the more stickier parts of the report, it wasn't the greatest. It wasn't terrible, but it wasn't the greatest report in the world either. After January's report was uniformly bad. It was a huge inflation number. So we didn't back off as much as we want. So I think the market is worried about inflation. Let me restate this. In August, the stock market corrected 8%. There was a worry in August about the yen carry trade unwind. That drove the 10-year yield down to 360. Now instead of correcting 8%, we've corrected 10%, and everybody's hyperventilating about a recession. Okay, then why isn't the 10-year note at least 360, if not lower? Why is it stuck at 430? Something is preventing it from falling. And I think that is a latent inflation fear. And what I went on to say about the rest of that tweet was you're not getting any rally out of the 10-year note. The only way you're going to get a rally out of the 10-year note is everything falls apart, which I don't think is going to happen. But if everything doesn't fall apart, I think that the yields are going to J-shot right back up to 480, which was the January highs. And then that will present a problem in and of itself because people will freak out about high interest rates. But I think that there's a message in the market. Like I said, for all of the mouth breathing I see on Twitter about, the economy's falling apart and everything's going terrible and Trump is going to cause a depression with all these tariffs. Fine. Why aren't we at 3% in the 10-year note? Why is it hanging around at 430? Oh, trueflation is down in the, we're going to have deflation. Why are we at 430? Why aren't we already at 3%? And the answer is never. The market's stupid. It's going to take another month to figure out what I know. No, it already knows that. It's not buying it. And it's not buying it because it's worried more about inflation, that there is a bigger inflation story.
Do you buy into this thing that the bond traders are like the 140 IQ people and the equity people are just the apes in the middle that are blasting?
Sort of. I mean, what's the big difference between a bond investor and a stock investor? A bond investor looks at investments and goes, what could go right and make me money? And a stock investor looks at investors and investments and says, what could go right and make me money? And a bond investor looks at investments and goes, what could go wrong and lose me money? So they tend to be more worried because that's the job of a bond investor, is to get paid back, whereas stock investors to take opportunities. So what typically happens since they're already worried about, getting paid back, what typically happens is that they tend to be a little bit more pessimistic. And when things turn down, they look like they're a leading indicator. So it's not that they're smart. What happens with stocks, of course, is that they usually, crypto you might put in this camp too, they usually get carried away more with emotion than the bond
Right.
market. So what happens
Exactly.
what happens is that markets go up, everybody FOMOs in at the top, and then it goes down and they all wind up losing money. Kind of like what happened when we hit 100,000 in Bitcoin. I mean, if you look at the fourth quarter numbers, it looks like all the boomers kind of piled in at 100K in the fourth quarter. They finally called their wealth managers and said, buy me some of those, buy me some IBIT. And they bought it when it was at 100K. And now it's sitting at 80 to 85K, and they're licking their wounds.
Jim, I wanted to ask you, how much of what we're seeing in the market, there's clearly some turmoil, people are getting skittish. How much of this is just like a reaction to a new administration coming in? And I'll pull up this chart here. You can see this is consumer sentiment, but based on if you're a Democrat, a Republican, or an independent, which is obviously smaller. You can see that sentiment was great during Trump's first years for Republicans. Then it was really great for Democrats during Biden's term, but bad for Republicans. And now Republicans have great sentiment and Democrats don't. Do you think a lot of what we're seeing in the market is just, over the last couple months, feathers have ruffled, people are getting used to a new administration. And then we also see that Democrat expectations for inflation are much higher than Republicans now. So do you think there's actually something fundamentally shifting, or is this just people's political preferences coming out into the spotlight?
No, I think there's something fundamentally shifting in this market, and I think that needs to be really understood. But let me take the survey first. I wrote a piece in 2012 for Bloomberg called "The World's Most Useless Economic Surveys," and the reason that I say that they're useless is that they're all political. Every survey is political. So whenever you ask somebody a question that is economically related, basically what they're doing is they're telling you who they voted for president. They're not actually answering the question that you've asked them. And, and what I've argued is that, I don't need to know who you voted for president. I need to know, what you're going to do. And you see that in that survey, right? That all the Democrats were fairly optimistic about the economy till Trump won. And then Democrat opinion dove and Republican opinion did the opposite. They were pessimistic about the economy till Trump won. And then they got optimistic. So and if you go back many years, that's the single biggest driver of these surveys. You could tell me your income, you could tell me your race, you could tell me your gender, you could tell me your net worth, you could tell me if you own a home. I can't tell you how you're going to vote on these surveys. Tell me who you voted for president, and I can pretty much tell you who you're going to vote for president. So that's why I think that those surveys are useless. Now, to your question about, yes, there is a big realignment going on right now. I think this is maybe one of the biggest post-World War II realignments that we're seeing with the Trump administration. Let me start off with their assumption, and Scott Bessent actually laid this out again last night on CNBC. He said it yet again, and that is the status quo that we've seen over the last several years cannot hold. We have too much debt. We have too big a government. We have too much of a deficit. We have too strong a dollar for trade. If we do like the Economist magazine's headline or cover story from last week was Trump with a can of gasoline with a lit dollar bill about to torch the world. And they said, their implication was, would you just stop and just go back to what we used to be doing when markets were at all-time highs and everything was calm like last year? And the Bessents and the Lutnicks and the Trumps and the Stephen Mearen's Council of Economic Advisors are saying, we do that, the world blows up. We do that, we go back to $7 trillion budgets, $2 trillion deficits, on our way to $40 trillion in debt. We're going to have 7 or 8% interest rates, and we're going to crush everything. We cannot go back to the status quo. We have to change what we've been doing. And that change is going to require a detox period, which is what Bessent called it, or an adjustment period, which is what Trump called it. And this is going to be a volatile change in this environment. Now, what is that they're trying to do? They're trying to do two things. They're trying to lower the dollar by trying to use tariffs as a piece of leverage to try and punish or incentivize people to do things that they want to help lower the dollar, to bring back more manufacturing into the United States, to get private sector growth going faster in the United States. And they're trying to lower the deficit and debt. And to that end, what they've done is they have identified that the size of the deficit is now a national security issue with the United States. There's an economic historian, Neil Ferguson, and he wrote it was actually an essay in the Wall Street Journal a couple of weeks ago, and he's been saying this for months, that he's quoting another Ferguson, Adam Ferguson, who's a 17th century economist, who said that when great powers pay more in interest costs than their defense, they stop being great powers. Now, that was said 250 years ago. And the U.S., starting in 2022, is paying more in interest costs than defense. And Neil Ferguson went through all of the examples throughout the last 200 years that that's happened. And one of two things have happened. Either A, you've corrected that situation, you've brought that interest cost down below defense spending, or you stopped being a great power. Elon Musk brings this up every single time he talks about why he's running around with a chainsaw, doing the Doge thing. We have no choice, is what he says. Scott Bessent says we have no choice. So they got to bring down the deficit. How are they going to do that? Well, they're going to do that in trying to bring back more business and having faster growth in the United States. But the big one that everybody's missing is we have $36 trillion of debt. Where did most of that debt come from over the last 50 to 80 years? From the U.S. being the cop of the world, from the U.S. keeping the trade routes open, fighting communism, fighting terrorism. So much of that debt has been defense spending. And what is Europe and the other NATO countries, that would be Canada, have not done over the last 50 to 80 years, spent much on defense. So Trump has been hammering all of these countries and saying, look, you got to start paying. And the Europeans have
agree with this approach, Jim?
Well, the Europeans agree with it. They've already agreed that they're going to spend $3 trillion on defense spending over the next decade. And they're going to start to spend trillions of dollars on defense as we go forward. So there's this whole new realignment on defense. Do I agree with it? I agree with it to the extent that they being the other NATO countries, that's Canada, mainly in Europe, have had a free ride. They have not had to pay big for defense. I mean,
it is a good thing. I think that Europe is finally doing something. They've spent too many years just smelling their own farts, to be honest. And I'm a European myself. It's been like so frustrating. The fact that they're getting their butt kicked now and they're having to stand on their own feet and figure out what to do is sad, but also maybe kind of helps them come into. And
it also causes a bigger problem. That speech that JD Vance gave at the Munich Security Conference a couple of weeks ago. Let me summarize what he said. Look, for the last 50 years, the U.S. has spent trillions and trillions to build up the Navy and the military to keep the free world safe. You guys haven't had to do that. And in this process, you've taken that money you would have spent on defense and you've instituted national health care and environmental policies and green policies and everything else down the line that has now caused your priorities and our priorities to diverge. And so now you've got to get back in line with our priorities. You got to pay for this stuff. And that's what Trump was saying. Look, I don't see any end to the war in Ukraine. And I'm going to cut a peace deal with Putin. And the Europeans went crazy about it. And the answer from the Americans was, fine, write big hundreds of billions of dollars of checks and send all your guns and tanks to the Ukraine if you want to keep fighting the war. We're not going to do it. And they don't even have guns and tanks to send to them. They don't want to spend the money. So they're kind of coming around to the agreement because they're not capable of doing it just yet. And that's what they mean by we can't rely on the Americans. What they mean by we can't rely on the Americans, look, I'm going to give you an American point of view. We Europeans can't tell the American military and the American treasury to go spend tons of money and send guns over there and fight a war that we think is important. If you think it's important, you fight it. And that's why we're going to see a massive realignment. Now, what that should do for the U.S. is dramatically relieve the defense burden that the U.S. has had to bear for the last many decades. And that should help to relieve the interest costs and bring down at least the debt to GDP ratio. It won't bring down the debt, but if the economy could grow faster than the debt grows, then the debt to GDP ratio will start to come down. So yeah, I think this is one of the biggest realignments that we've seen since World War II. Now,
do you actually expect that they're going to tap into the defense spending? Like, do you think that Doge or whatever, like do you think that defense spending reduces?
Yeah, because I think most of it's a waste. I think most of the defense spending that you see out of the Pentagon, they're going towards the Pentagon. I think you're going to find that there's a lot of wasteful spending within the Pentagon. And then there's also, I don't want to You were joking about, all us macro guys are defense experts and are experts on all these topics. I'll also go on to that. I'll just say what I read is that there's also a big argument about how we spend money on defense. And I'll just give you one thought to keep. Look, the U.S. Navy. Let's be fair about it. I don't like it as much as anybody else. The U.S. Navy lost the fight in the Red Sea against the Houthis. They did, and the Houthis still control the Red Sea. Now, how did the U.S. Navy lose that fight? Because the Houthis will put together drones literally with lawnmower engines, duct taped, and a couple 100 pounds of explosives that cost them about $50,000 a drone, and they would launch it at a ship, and the U.S. Navy would shoot it down with a $10 million missile, and the Houthis were willing to play that game all day long. We'll shoot $50,000. We'll launch $50,000 drones, and you'll shoot them down with $10 million missiles till your guided missile destroyers run out of missiles, and then they have to leave, and we control the Red Sea. The U.S. has to start thinking about, how do we shoot down stuff for $100 or $1,000? Not do we need another $20 million missile to shoot this stuff down. And they're not quite there yet. And once they start thinking in those terms, they have to start thinking in cost benefit terms, because what we learned in Gaza and stuff like that, is they will shoot $5,000 missiles at Israel, and Israel will spend with Iron Dome $500,000 to shoot down a $5,000 missile. They'll play that game until the end of time, until Israel runs out of money or runs out of missiles. So we got to figure out a way to do this even less expensive than they can in an unlimited way. So we'll shoot down as many of them that they want. This is a whole new rethink on how we're going to fight wars and do stuff. But what does the military want? They want another $12 billion aircraft carrier. They want Space Force. They want all the toys that cost enormous sums of money. That's not the world we live in anymore. You get rid of that mentality, you're going to bring down that budget, is what I'm trying to say.
What are your thoughts, Jim, on the why now question? Is the administration making the right choice that, one, either things were going so well that this is the time to ruffle feathers, or two, this was so unsustainable that things had to be done today? I think a lot of people inherently agree with some of the decisions that are being made around the economy, but I think there's a broader question of, was there an urgency to do this right now? What are your thoughts on that? Do you think it's political that Trump wants to get this done in his first couple of years so he can have a good legacy for his second 2 years? Or do you think it really needs to happen today and there's urgency here?
Well, I think, as far as why now, I think the big answer to that is Trump ran as a change agent. Trump ran on the idea that I am different and I am going to fix many of the problems that we have had. And that I am telling you, he is saying, I am telling you that we have no more time. The typical Washington fix is to go slow, be measured, be careful you don't break things. He's saying, no, we have no choice. That's why he's saying it's an adjustment, and they're calling it a detox. They're telling you that these markets are going to be volatile, and they're telling you that we're going to see epic, convulsions, and they're telling you we have no choice. So I happen to agree with them. I understand that there's an argument, and it's a valid argument to say that we're moving too fast, but that argument's kind of moot. Go ahead, argue we're moving too fast. And when we're done, I would say Bassett, Lutnick, Trump, and his 81 million voters disagree with you. So we're going forward with this path.
Yeah.
Whether you like it or you don't.
Let's bring it back into, some of we have 2,200 live viewers right now. Some of our audience are, let's say, the left curve, mid curve people. They probably hold a lot of fart coin, maybe still. They've written it down 90%, and they want to know. Jim, is my fart coin going to come back? Am I going to be able to afford a nice bunk bed like the ones you have in your background there? What's going to happen with the money printing? And we've seen the recent polls, and here's kind of where maybe I'll push back. The Trump polls are awful. I mean, he's fallen into the low 40s. It's really, a lot of people have stocks, right? And a lot of people are not happy right now. They're not used to this. They've had a good few years of 20% returns. The question I have for you is how much pain do you think they can take? Because we're seeing, Elon will have this tweet that Elon is basically starting to have some issues. We saw Tesla's price going on. We're seeing, a lot of pushback. that is hurting financially. And I do believe that Elon doesn't just care about his net worth. He seems to be driven by a lot of stuff, but they're exposed to the tariffs, they're exposed to like a lot of this stuff. If the people around Trump start suffering and his approval rating starting to fall off a cliff, how long do you think they can really hold out on this adjustment period? Because I don't think it's that long. Maybe you think otherwise.
So a couple of things, just real quick. I'll push back on that was just a Quinnipiac poll that had him at 42%. Rasmussen at the same polling team had him 52%. And if you look at the Real Clear Politics polling average, Trump's 55 days into his administration. And he is now, every one of the 55 days that he has had an approval rating for is higher than anything he had during his first 4 years. So he is still, what is his record highest approval ratings ever? Now, it's higher than anything that he's had prior to this right now. Now, yes, it's 48%, but that's the world we live in right now. But that, so it's not terrible yet. Second, okay, people are unhappy that that their portfolios are going down and their fart coin lost 90%. Be happy you still have 10. By the way, be happy you still have 10% left in your fart coin. So that's where I think that one's going. But the answer the question I would ask is, okay, what do you think we should do to fix that? Do you think we should just stop with the tariffs? Do you think we should just tell Europe, don't worry about it. You don't have to spend any money on defense. We'll take care of it. What do you think is going to happen if we do that? We're going to have 6 or 7% 10-year notes. What do you think is going to happen to your? What do you think is going to happen to your S&P when that happens? What is the scenario that you think will put us right back at the all-time high? So my point is, either we go through with these changes, or we go back to the status quo, and that's a problem too. So we're at a point where we either have to go forward or suffer the consequences of not going forward. There is no door number 3 where everything goes up, volatility goes down, Farcoin goes to $10, and everybody's happy. That door doesn't exist. That's the argument I think we're facing. Now, going forward, the argument, I want to make sure we understand this. Going forward, the argument is not that we're going to have a period of adjustment, but maybe in a year or two coming out of it, we'll be in a much stronger position. We'll be in a better position and the markets will recover. So it's not necessarily a terrible experience. It'll just be a ride to get from A to B. Or to finish off the thought for you real quick, if there was a scenario, I think you're right, Jim. Let's fix the deficit. Let's fix the debt. Let's fix the payment for securities. Let's make an adjustment on the dollar. I want to see this all happen with a 13 volatility on the VIX, and I want to see the stock market go up 12% this year, 15% next year, and I want to see Bitcoin go through this adjustment period by going 100, 125, 150. If that was possible, we would have done that already. We wouldn't be on this podcast talking about it. That option doesn't exist.
Jim, I wanted to ask you, so we could pull up, you can see here gold is now cruising through all-time highs, done really, really well. BlackRock has sort of pitched this thesis of Bitcoin potentially being a digital gold or a hedge against global instability. I think everyone agrees, and maybe gold is showing us that there's global instability, tariffs, etc., trade wars. Why do you think it's not? Why is that not translating to Bitcoin doing well? Why is Bitcoin down 30%? Do you think this narrative that it was a flight to quality, which was Bitcoin, is sort of false, and Bitcoin is really just treated similar to a higher beta NASDAQ?
I think it's a higher beta NASDAQ. I've even tweeted out that chart that there is a thing called TQQQ, which is a triple levered QQQ, and I've overlaid it with Bitcoin, and it's a pretty solid correlation over many years. And so the problem is, first of all, gold, by the way, now that gold has broke through 3,000 here, it's actually outperformed the S&P for the last 25 years. That's how impressive the rally has been in. And yeah, you're right. You're right. Well, that's also a little bit of a chart crime, because
chart crime.
March 10th, 2000, that was 25 years ago, was the NASDAQ peak. So it just so happens. But nevertheless, I could find a 25-year period ending today that gold outperformed, even though it was the NASDAQ peak, back in March of 2000. Now, 25 in a year, if you do the previous 25 years, the S&P and the NASDAQ will outperform gold unless it goes to like 8,000 or something like that. But I think you're right that gold is the uncertainty instrument you buy. But Bitcoin and cryptos, the problem with them is that we say they're digital gold. We say they're an alternative financial system, but they're actually just a speculative vehicle. That's the way we treat them. That's why we get all excited on crypto Twitter to talk about, Tom Lee says 250,000 at the end of the year or something like that. That is a speculation. Tom Lee is not saying that there's going to be big developments that are going to foster the idea that an alternative financial system is coming. No, it's all number go up. It's all a casino mentality. And if it's a casino mentality, you need the rest of the casino, meaning, the S&P and the NASDAQ and everything else to go up with it. Now, we always have these winters. And when we have these winters, we get back to development. And when we get back to development, we have some really good types of innovations in the space, and that breeds the next summer. And I think that'll be the same thing with this cycle. Let me go back to Fartcoin for you real quick. I think if you own any of the meme coins, I would implore you to go and take a look at the ICO boom of 2018 and find out what happened after that one deflated. Go back and look at the DeFi 1.0 boom in 2020, 2021. When that one deflated, go back and look at the NFT boom. And what happened after the NFTs inflated? Go back and look at where where OpenSea and the rest of those are, and what's going on with all those NFTs. I think that's where we're going with the meme coins. I think the meme coin mania peaked with Trump's launch on the 18th of January. That was it. It was over with at that point. And the biggest loser in the meme coin mania is going to be the chain that you put all the meme coins on, and that's Solana. And it's been getting devastated. What's it down? 60% from its high now, which was set in January. I think that, Solana's exposed itself, that it wound up being at the end of the day was the home of all the meme coins. And now meme coins are going the way of NFTs, and Solana's in trouble.
I mean, there was double whammy. I think we talked about Solana had these like huge unlocks from the FTX days, all these like SPF coins to deal with the devil they made back in the day, kind of coming back to haunt them now with, about many billions of dollars of unlocks. But just before we move to, SBR and the administration's takes on crypto, just to wrap up, I put out a tweet, and my thesis is that the U.S. taxpayers and the U.S. Citizens are not ready for austerity. And this thing that you're talking about, Jim, I don't think will resolve itself with, 6 months of chop or whatever. I think this is a multi-year thing. We're seeing this in Argentina. And I think Argentina, having, had decades to try everything else and all the populist rulers, they just told Milei, just go for it. We'll, at this point, we're already effed. We'll take the pain. You do your thing and we'll be with you. Now, I don't think that the American citizen is anywhere near that level of like acceptance of austerity. And like you said, there is no third door, but the path of least resistance, I feel very strongly, is going to eventually be, we'll do this little act, the 10-year, we'll try to bring it down a little bit, but the pain is going to be too much pretty soon after, if it gets worse. And they will have to start asking Powell to cut rates. Hey, Powell. Hey, Jay, you better do this now. Everyone's hurting. They're going to start all this stuff. And then a lot of the things you said, like, these century bonds we're hearing about, force people to buy our debt at lower interest. And because at the end of the day, first principles perspective, the only amount of money that gets created every year is like the productivity increase. And I don't think AI is at the point where it's exponentially changed that. We have a few percent a year that we can give out, and there's winners and losers. And the winners might be the bonds, it might be the stocks. You're gonna just like reshuffle winners and losers. There's no like free money tree. Do you agree with this so far, or any first comments?
Yeah, I agree with a lot of it. Just start off with what you said at the beginning. I think if you look at the relative importance of world leaders after the G8, right? Always the G8 leaders are the most important leaders in the world. Who would be the 9th most important leader in the world after the G8? I think it's Javier Milei. I think he is the intellectual godfather of Doge. Where do you think Trump got the chainsaw from? Milei literally gave it to him at the CPAC conference last month. So they're definitely looking at the Argentina experiment with Doge to try and bring that here. So at least I would agree with you there. He is arguably one of the most important leaders in the world, just because his experiment for the moment seems to be working. It was enormously painful in the beginning. Now, I think you're right that the American public is not ready. Well, half the American public is not ready for this. I think the reason Trump got 81 million votes on the idea that I'm going to be a change agent is, in the US, we call it the K-shaped economy. The bottom half of income on a relative basis has been falling behind the top half of income. Half the people in the country rent and don't have any assets. So when you tell me, well, there are going to be a lot of people upset about the stock market falling and how prices wobbling and Fartcoin going down 90%, well, here you go. Half the country doesn't own any of that stuff and doesn't really care. And they just know that the price of eggs is going up and their boss isn't giving them enough of a raise to pay for them. And therefore, they're ready for the change. It's the top half that's not ready for the change. But I would come back to the top half and say, well, where's door number 3 that's going to get you a new all-time high with low volatility and keep interest rates low? What is that door? How do we go through that door and do that? I don't think that door exists. So when everybody stammers their feet and goes, I don't like it that my portfolio is going down and I've lost all this money. What is it that you want? And to your specific point, going back to what I said earlier, if the reason we're at 430 on the 10-year note now and we're not at 350 on the 10-year note now, is because there's a lingering inflation fear out there. And take a look at the University of Michigan 5 to 10-year inflation forecast today. It was at a 33-year high. That people are so worried about inflation. You want to destroy the bond market? Tell Jay to cut rates into an inflation fear.
I mean,
he should be raising 50 on the 10-year note. He should be raising rates if you actually want 350 on the 10-year note, because that would perceive a slowdown in the economy and maybe trying to bring down inflation. So yeah, I think so I would come back to this. You don't like it. I don't like it. No one likes it. Where's that door that makes this go away? Because I cannot emphasize enough, if the door is go back to a $7 trillion budget, go back to $2 trillion deficits, and just borrow trillions of dollars a year and just give lip service to it's a problem and just keep doing it and watch what the bond market does if you try to go back to that. So we can't go back. Yeah. We have to go forward, and there is no door 3.
I mean, Jim, let's just say that there's a structural problem with democracy, and we don't have these benevolent kings, or the ancient Greeks used to say, these philosopher kings that are, if you and I sat in a room together and we understand the economy, we've been around, and we just think of the policies to do, and we could just implement them, then maybe we could avoid the disaster. In my opinion, the smartest thing to do is raise corporate tax. I know corporations are not going to like that, but ultimately there's many reasons why I think raising back corporate tax is one of the few levers to combat inflation and actually kind of redistribute properly. But getting away from that for a second, the democracy is mainly, like you said, there's a lot of people at the bottom, don't have assets. How do you win their votes? These people, generally you give them some free stuff, and they're happy because they don't have assets anyway. You give them some bread and circus, some free stuff, entertainment, and you kind of brainwash them a bit with social media. The people at the top, they're the ones financing everything, right? They're the ones paying for. You have 10 billionaires financing the entire politicians, basically, right? So if you keep those people happy, you have varying degrees of happiness in the middle. And I think for the last few years, what we've had is, yes, assets have gone up a lot. The average person, let's say, has 25% of their net worth in stocks and a bit in their house, and they have their wages. That's most of their income is through their wages, and they might feel like they're doing well because they got a increase in their salary 5-10%, and their stocks went up. So that part of their portfolio, but they're actually on a relative net basis, they're probably not doing any better, right? They're kind of running in place. They just don't realize it. They feel the numbers went up, but because of inflation, the cost of a lot of goods, it's sort of like a deceit thing, and they just kind of haven't done much better. And it feels like that's sort of like the default for a reason. Like that's why we've been having 20 years of this.
Yeah. So a couple of things. We're at a point now with the deficit and the debt that, you can't, all you're going to do by raising corporate taxes and taxes on the wealthy is destroy the economy, and you're not going to fix that problem. There's not enough money there. The biggest pot of money, I hate to say it, to be blunt about it, the biggest pot of money out there to fix our deficit problem is the rest of the world. And they're going to have to get them to pay it. And we're starting with Europe by paying for security. That's it. That's how it always has been throughout history. Whenever you get over indebted, you have to get it from somebody else. You can't get it internally. And that's what we're trying to do with Europe. We're trying to say to Europe, look, a big part of this has been defense. It's time you guys start paying. That's what the Mar-a-Lago Accord argument or idea that there'd be this debt swap for treasuries for 100-year zero coupon bond, that's just a payment mechanism. All that was what we were saying was that if you want our defense, you got to pay for it. You're not going to write us a check, so we'll do the swap. So I agree with you. That's always been history. Why do you think countries invade other countries is all I'm going to say, is when they get over indebted, they got to get the money from somebody else. And we're going to basically try and get it through this idea of a security arrangement with Europe. And Europe knows they have to pay it because Europe knows if we back off. Remember, Trump famously said during the campaign, I say to Putin, if Europe doesn't pay their bills, do whatever the hell you want to them. And they know he's serious, and they know that they've not spent money on defense, and they need the U.S. to protect them, and they haven't paid for it. And now they have to start to pay for it. So I agree with you there. And then just one real quick part about the bread and circuses. Bankrate.com does a survey every year, came out in January. And in the January survey, 55% of the American public says they cannot come up with $1,000 in an emergency. They'd either have to put it on a credit card or borrow it from a friend. But they don't have $1,000 in their bank account. That's over half the country right now. So when you say, look, we need change and we need to do these things, again, the majority of the country is not exercised about the stock market falling. And in politics, it's one person, one vote. Jeff Bezos does not get 10 trillion votes. He gets one vote. And a person on public assistance that has no home and doesn't have a portfolio also gets one vote. And those people don't own assets, and they want change. And their change agent is Donald Trump.
Jim, I want to ask you, I think, like, what's basically the most relevant question now, which is this market turmoil sort of priced in consensus now? So S&P was down 10%, NASDAQ 15%, NVIDIA, I think 30%, Tesla 50%, Bitcoin 30%, Solana 50% plus, etc. I mean, surely some of that has to be priced in now. Like, do you think the markets come along to your thesis for this turmoil over the next, call it, couple of years, several months, etc.? At least in my circles, I'm seeing on Twitter that this is basically the consensus conversation people are having now. So do you think there's still a lot of room to fall here, or do you think markets have sort of priced everything in and we should look for things to calm down in the near term?
So I'll answer the question long and then short. Long term, I've been proposing this thesis long term that these are going to be for the next several years, the 4, 5, 6 markets, that cash, money market funds will return you 4%, that the bond market will return you 5%. That's the coupon on the bond market right now, the all-in coupon. And that stocks over the next several years will return you 6%. And there'll be opportunities in, themes and stock picking. Maybe you could do better if you're good at that. And that this is going to be, why are we in this environment? Because going into the beginning of the year, the valuations in the stock market were so high that historically it's very hard to continue to see it rally big. Now, how do you fix the valuation problem? Historically, earnings go up about 9% a year. Let's assume that they will continue to do that. And I think that's a reasonable assumption. We're going to need a decade of 9% earnings return and 6% stocks return, and that will correct the overvaluation. Now that I've said that over the long term, 4, 5, 6, that doesn't mean that we're going to have 6 this year and 5 this year and 4 this year. we could do anything. So yeah, I agree with you that we're probably close to a bottom on the stock market right now. And maybe we get a rally, and then we're going to get at least a retest or a lower low later this year. And I think that we're going to wind up with a low single-digit return year in the stock market as we move forward. If crypto is a speculative tool, it's going to do the same thing, is what it's going to wind up doing. That there's really going to be no argument for crypto to break its correlation with the speculative markets like the triple Qs or the SPY or something like that. So they'll kind of meander about, but there'll be a higher beta version of that too. So I think that we are at a point where the valuations in the stock market have been so stretched, and I'm talking about the non-Mag 7 valuations in the stock market, that unless you tell me that we're about to have a massive surge of earnings, which we're not having right now, then we're probably going to be in an elongated period of low single-digit returns over the next several years. And it's going to be viewed as being very disappointing for a lot of people because, as we talked about earlier, everybody's lazy. We're all fucking lazy. We just want to buy SPY. I want to buy SPY and I want to stammer my feet and go up 20%. Well, now you might actually have to do some work to find either find a professional manager to manage your money or find some themes that work. And that's that right. Era of just buying the S&P and just waiting for it to go up 20%. That will happen again once we get the valuations corrected, but that's going to take several years.
Yeah, I mean, some of our audience don't even like the stocks, like you said, they like their meme coins, and your bashing of the Solana and meme coins have gotten a lot of angry comments here. We say meme coins and Solana will never go away, says Malik.
Neither would NFTs. I mean, technically NFTs never went away too, but how much do you own in NFTs? I mean, the meme coins.
Do you follow Murad? Do you know Murad? Have you followed Murad?
I don't.
He's got his meme coin. He's the meme coin super cycle guy. And Justin, can you bring up this video? We have a live view of this. Is Murad build posting every day on 100 billion valuations? The party's ended. The party's ended an hour ago. He's still out here on Twitter.
That's the reason that the party's ended. When you start getting bullshit like that tells you that the party's over. But no, I get it. But look, the meme coin thing was the extreme example of the speculation that we've seen in markets. That's really what it was. And you put it over the top. Like I said, I think it was the Trump coin on the 18th of January that came out. And we got those stories over the weekend that he had a $50 billion market cap or something.
Do you believe in crypto cycles? Like, do you think the Trump meme coin launch was cycle top and now we have a 1 to 2 year bear market and then another bull market? Or do you think we're now just correlated with general risk?
No, I think we are. I would like to think that we're going to eventually see crypto not be correlated to general risk. But yes, what will happen is, like I said, 2017, we probably had some idiot dancing too about the ICO peak. And then that then went away. 2020, we got a bunch of this about DeFi 1.0, and that went away. 2022, we got this about NFTs, and that went away. 2025, we're getting this about meme coins. They're going to go away. The next winter will be something else. It won't be the resurgence of Solana meme coins. Jim, I think that peak is done.
Like, we're going to ask you to straight. Okay. We understand you don't like the meme coins. Let's just go from the top. Bitcoin. Do you how is that? How is that like an investable asset? Like,
yes. So now that I've shit all over Solana, and you didn't even get me onto that it's actually centralized, and that's a whole nother issue altogether too. I'm going to just burn down your Twitter feed here while we're going for it. I actually do like crypto, and I'll say it again from the top. The world needs an alternative source of store value, an alternative medium of exchange, and a way to conduct transactions in that store of value in a medium of exchange. Let's call that DeFi. And there's 2 billion people in the world, Southern Asia, Latin America, Africa, the Middle East, that live in countries with lousy currencies and unstable financial systems and banks. And 80% of the world, even if you go to the Congo, 80% of the world has a mobile phone. So they are your audience for an disruptive alternative. And if you're going to give us that disruptive alternative for that crowd, here's a store of value. Here's a medium of exchange. Here's a way you could store it. You can borrow against it. You can lend it. You can transact in it. I am all in on crypto. That is a product that is needed. And that is a product that we should be killing ourselves to put together. I'll give you one quick example. When the U.S. pulled out of Afghanistan in 21, and they left, and the Afghan central bank collapsed, and the Afghani dinar collapsed, and their banks collapsed, how did the typical Afghani go to work the next day, go to the baker, and pay for bread? What did they do when their currency collapsed, their banks were closed, and everything else? They all still have mobile phones, and they opened up wallets on their mobile phones, and they started transacting in stable coins. That's who needs this kind of product. So I am all in and still very bullish on the long-term prospects of crypto. Now, what happens is, yeah.
I think me and Justin have the same question. And before we go to everything else, okay, Bitcoin store of value. Okay, good. Okay, deep gulp, everybody.
Ethereum.
Okay. Okay, Jim.
What about Ethereum?
Why does Wall Street not like Ethereum? Why are they not buying our Ethereum ETF? Do they need the staking? Is that going to change anything? How do we make Ethereum go back up?
I think Ethereum, you're right. I think that Ethereum has been the most frustrating aspect, that it kind of got lost in the middle, right? Bitcoin took the store of value. Solana took all the speculative froth away. We're not creating the meme coins on Ethereum. We're creating them on Solana. And now that game is over with. But in the middle, if Ethereum gets back to kind of a, where it was in the summer, when DeFi summer, that it was the emergence of a new financial system, that's what gets ETH going again, I think, at this point. And that's what gets Wall Street interested in it. All I was going to say about, just to finish off my last thought, was, if you're into this whole idea, yes, store of value, medium of exchange, and everything else, then all this bullshit about we're going to go to 250, number go up, here come the boomers, they're all going to FOMO into this stuff, that's not going to get you there. That is speculative fever that will work for a while and blow up, at least in the Mag 7. When you talk to people in the Mag 7, why do you like NVIDIA? They talk about the H100 chip, and they talk about the product, the actual purpose of it. And then when you talk to people in crypto in the last 6 months, what's the purpose of it? Number go up. That is not a purpose. That is an outcome. What is the purpose of it? They've lost the purpose. What is the store of value, the meaning of exchange argument? How are you going to get this to everybody? And so I think we've lost our way. And that's why we do this all the time. We've lost our way 3 or 4 times, and we always kind of come back during the development of the winters. And that's what we're going to have to wind up doing again. What are you trying to do? If you're trying to create a new financial system, then make a new damn financial system and quit trying to turn it into a casino over and over again. We have dumb dancing memes because meme coins are going up. You've lost the fucking plot when you go to that point, is what's happened. And that's what all the winters are, is when you lose the plot.
I mean, Gilo is here. He says Ethereum has a political problem, and obviously we've seen the big DC meetings recently. Like a few days ago, they got all these exchanges, all these people. There's obviously Bitcoin representation, right? And in fact, you could say Bitcoin won. They won the day because they won their special strategic reserve asset. So it's a macro asset, right? Everything else is not a macro asset. There's no strategic value. They called Bitcoin a strategic. I don't know. It's like petroleum. There's some strategic value to holding it. Everything else, not really. Ethereum doesn't have any represent. Vitalik wasn't there. You got Michael. You got the Bitcoiners there,
right?
And then, like you said, you have these shit coins, like those ADAs and XRPs, all this kind of stuff. Which I think they tried to put it somewhere.
Don't forget Solana. Don't forget Solana in the shitcoin category. I'm going all the way here.
Jim, where were you in January? Why didn't we have you on in January? You could have told us to sell the top, and I might have listened.
But no, you're right. You're right that they were. But I would also argue to you that be very careful, because what Saylor and Armstrong and the rest of them are all doing is they're all lining up at their own funeral if they're not careful. You declare Bitcoin a strategic asset reserve. Now it's in the interest of the government to manipulate it. It's in the interest of the government to take it over. How does the government take it over? It's issuance. It is decentralized and permissionless at its issuance, but at its ownership level, they're going to own so much of it. They're going to start to dictate how this thing goes. And they're going to start to say that it is now in the national interest that they have more control over Bitcoin. Now, I don't know if they're going to do it through the miners, through your wallet ownership or something. Be very, very careful when you allow the government in on your business. And that's why I think that's a mistake.
You said, the government of the U.S. has to go to other countries and take their money. And we were saying Bitcoin is a strategic asset. North Korea just hacked $1.5 billion and put it into Bitcoin, is what I understand. So maybe we can do some counter hacking. The U.S. can do some counter espionage, national security stuff, and take the $1 billion back. It'll probably save us some missiles as well. So maybe
exactly. Now, of course, that is, that's going to continue to happen, but be very, very careful. The whole idea, if you look at every disruptive technology that becomes a success, they push against the status quo and they fight the status quo. Saylor and Armstrong and the rest of them getting in bed with the status quo, I think is short-term number go up, long-term be very careful. Now, the only hope I have is that this Bitcoin strategic reserve and all this other stuff turns out to be a big bust. That in the long term would be bullish. I mean, it'll be negative in the short term because everybody was just frothing at the mouth that we were going to have another whale called the U.S. government that was going to get you 200,000. I get that. You're not going to get that. But I think in the long term, you don't want to be in bed with the government. You want to present yourself as an alternative to the government, not to be.
But surely all these like SEC lawsuits that we've dealt with Gensler for years, like the fact that these are being dropped is probably a good thing, right?
That's a very good thing. And by the way, I think the biggest winner in that is probably the Ethereum blockchain, because it's the one that's been stuck with the securities tag. It's the one where all the DeFi protocols and everything else have been strangled by, come in and register, but we won't tell you how to register. That's all been the DeFi protocols and stuff. So all of this dropping of the SEC's overregulation in crypto is, I think ETH is probably the biggest winner in all of that. But right now, it's not getting any traction for the moment.
Will staking on the ETF, like if they tell people, look, you're also getting 3% or something on top as a bond, is that going to be like night and day more sellable for the asset manager kind of people there, the wealth advisors, or not?
I think it will help. It will definitely help. Yeah, I think it. Wow. I think it will help. Go look at the ETH. I guess I'll say this because I understand I'm talking to primarily a crypto crowd, right? Go look at the ETF flows for the last year or the last 3 years, and look at primarily who are the biggest flow numbers coming in. Now, I understand we will take the 5 or 10 S&P ETFs and QQQ out of the equation. Who's among those short-term bond funds, cash-like instruments, ETF cash-like instruments are getting billions of dollars in every day. That FM is a ETF provider, has an ETF called T-bill, which just owns the 3-month bill, billions of dollars coming in. Bond Blocks has an ETF, which is called XHAF, which has a 6-month duration, the 6-month treasury, billions of dollars coming into it. Wisdom Tree has USFR, which is it owns short floating rate notes that are basically short-term cash instruments, $15 billion at its peak. Huge amount of money is coming into these ETFs. Why? Because they have a yield of 4%. And that people are buying an instrument with no price appreciation that have a yield of 4%. There is a huge audience for that type of product. So if you give me a crypto with a 3 or 4% staking yield, I think it's a huge difference in what we're seeing. But you have to get there right now. They got to get over these rules about being a security and all of that other stuff as far as being able to pay interest, because that's what's holding it back.
So just real quick, Jim, you like Bitcoin. It sounds like you like ETH. Are there any other tokens you like right now or crypto assets? And I guess, have you ever bought anything very long tail? Have you ever gone out on the meme coin spectrum yourself?
Yeah, I still have my people tokens from 2021 when they were trying to buy the Constitution.
Oh yeah,
You know,
Constitution DAO. Good times.
yeah. I still have
Wasn't
my
Ken
original.
Griffin? Didn't Ken Griffin overbid them or something just to?
Yeah,
mess
he
with them?
rugged them. He rugged them on that thing. Because Griffin was he rugged them on the thing because Griffin was anti-crypto at the time in 21. Now all of a sudden, I think it's like his 14-year-old son is getting on his case about that, and he's having a rethink about crypto. That was my original. Bitcoin, or excuse me, meme coin entree was my Constitution DAO, which I still own to this day. I should have sold it when it was 17 cents, but I didn't. And I still have.
It's down 90%, but just be grateful you still have the 10% left.
Right. I'm still above. Yes. Yeah. I'm still above my break-even cost because I was I got it because I originally invested to buy the Constitution and then converted it into Constitution DAO people tokens after it rugged. And my first airdrop was ENS, if you want to go that far too. I still own my ENS airdrop as well.
Jim has been he's been in the trenches, everybody. Like, so there's the proof. We will go to pasta of the week. Please like and subscribe. We have some thousands of people. It's our first time streaming on Twitter, and there's thousands of people watching there. So maybe we can get some subscribes. We try to bring the show every week, and we have no ads, as you guys always know. Jim, thanks for coming. We're gonna go to pasta. I think we all have like a tweet we want to share, and we'll end with that segment. All right, Justin, you wanna kick off with your pasta this week?
Yeah, Jim inspired me to do a little last minute change up. So I saw this tweet here. Bought a doodle for 1.29 ETH, sold it for 2.82 ETH. That's a profit in ETH of over 1 ETH, but unfortunately he's still down $1,184. And this reminded me of this very classic, all-time one of the greatest pastas. And Jim, this one's for you. When the NFT you bought isn't worth 1 ETH anymore, the 1 ETH isn't worth 4K anymore, and the 4K isn't worth 4K anymore. So I don't know what to do anymore. The dollars aren't worth as much anymore. The ETH isn't worth as much as anymore. The NFTs are dead. The meme coins are dead. I don't know where to allocate, but yeah, I thought this was hilarious.
Oh, good.
You should be dollar cost averaging in the winter is what you should be doing. You shouldn't be FOMOing at the top.
I appreciate that.
And Jim, we have a pasta as we were chatting with you before the show, Ethereum related. You said that this performance, was something you've seen.
I don't know how to unsee this, but when I watch this. And when I watch this and I watch Vitalik, I am now convinced that there are aliens that walk among us. That's all I'll say about that.
Back to building.
Oh, man. Oh, boy. All right. And so I have a pasta from Buzzlamic Jihad. This is the guy that's been bull posting Aptos nonstop. He's been saying how Aptos looks good here. He's got Aptos charts. With the market downturn now, he switched to LinkedIn looks good here, and he's open to network, everybody. So if you want a very non-suited for work bull poster, he's your guy. We'll put the poll up. Everybody on the Twitter side, I think, can vote. On the YouTube side is going to be able to vote for a couple minutes. And while we wait for those. Maybe let's get a couple last thoughts. Jim, do you think the administration is done with crypto for now? Or are they moving on to other stuff? Is it, promises done, promises kept, and just leave us alone now, you crypto guys? Or do you think, Bitcoin Vegas in Miami, Trump comes back and he starts bull posting in person again?
No, I don't think. I think Bitcoin in Miami, you'll probably get David Sachs now. You won't get Trump. I don't think they're done. I think that the next they're done in terms of the promises kept. We're going to do the at least the ownership. We're not going to sell our Bitcoin, that the 200,000 Bitcoin that they have at the Justice Department. By the way, they're going to put that in this new sovereign wealth fund. So I suspect we're going to have some big ceremony where Pam Bondi, the Attorney General, is going to have her thumb drive and she's going to hand it to Scott Bassett and say, "Don't lose your seed phrase, but here you go," with your 200,000 Bitcoin on it. We'll have that. But I think the big thing you're going to see from the administration from this moment forward is going to be Paul Atkins at the SEC backing off on a lot of the regulations on what is a security and allowing the industry to thrive in the United States. And that's ultimately what I think we need from the government, is just leave us alone and let us develop and don't keep getting in our way. And I think the biggest winner of that, which is what was held back the most, is ETH, because Bitcoin was not considered a security. ETH and everything about ETH was considered a security. And all the DeFi protocols were considered securities. Leave them alone and let them start to get back to development all over again. I think that's where we're going to go next. And I think that will be the big, get back to building and get back to that. Are you going to be the alternative financial system? Let's get going on that. And I think for 4 years, they couldn't, at least in the United States. Anytime they tried to do anything, they were getting Wells notices left and right. And now maybe that will end. And that's what I think you should see next from the administration.
Well, the polls are in. I'm seeing a lot of congratulations. Well-deserved, Justin. Good to see you winning in life. It looks like I won. Positive of the week, 47%. It's the first time in maybe 6 months.
I'm happy. I'm happy for you, Justin.
For once.
Justin, give us a little Murad dance. Give us a little Murad dance.
Casino's still open, Jim.
What's the difference between that and the Trump dance?
I guess Trump dance to the side.
Yeah, Trump dance is this, and then there's this.
Yeah. All right, Jim, thank you so much for coming. One of my favorite episodes. I think all-time high in viewers already. Like and subscribe, everybody. Thanks, and see you next week.